Kinda. What's up, everybody? Mute this guy. Oh, wrong button. Let's get some of this stuff off the screen here. All right. Some earnings out. Nothing really big as far as names. Ulta, I heard they had decent numbers. Nice pop. What does that look like? Looking better, right, Ulta? I own Ulta in my Tuckaway account from ages ago. HPE, I think that was up and then turned red. Yep. They just can't get going, HPE. Two steps forward, one step back. What was there was somebody else that was somewhat interesting. I think Doku, but it wasn't. Doku looks down. Again, nothing really noteworthy coming out of earnings. Ulta, nice reaction. How's everybody doing? Thank you, Romanowski. RBRK, that's tonight or tomorrow morning? Oh, tonight, huh? Whoa, I thought that was tomorrow morning. This thing's been dead money for a while. That was the other name. Thank you for that. I would have been trying to figure out the other name for like an hour. Oh, IoT too, right? Isn't IoT? I think some of you were interested in IoT. That looks down 80 cents. All right. So let's get going. Try not to keep you guys too long. Kind of want to spend the majority of the time. We'll talk a little bit about year end, which again I don't want to spend too much time on year end. There's a basic playbook usually for year end if things go as planned. You got a Fed meeting next week where they're expected to cut. Probably people more interested as well in kind of the dot plots and comments that come out of the meeting. So you got a little bit of a wild card involved there. Maybe can push things in either direction a little more than expected. But generally, the holidays and into year end, and I think the setup coming in, this little wrench we had, if you remember. Yeah, I don't remember the last time we met on this webinar with the holidays and all. But this little rinse, this little shakeout was kind of everything the market needed to kind of get that bullish momentum set in motion for year end, right? Not necessarily the indexes continue to melt up every single day, but I'm sure you're well aware of the seasonality through the holidays. And we're even starting to get some confirmation. A lot of times during the holiday season at the end of the year, if things are more on the quiet side, you get a lot of short covering, right? Because what happens is, and usually why the seasonality is so bullish, hedge funds, and I think that's a perfect segue to this chart here, okay? If hedge funds are kind of underexposed, if they don't have as much exposure as they would like coming into the end of the year, they kind of chase for performance, right? And what that includes a lot of times is short covering in some of the more speculative and heavily shorted areas, right? That's what we've been seeing the last couple of days. I see already a few of you mentioning some of those names. Basically, any name that was a part of that strong bull market in small and micro caps we had up until a month ago, basically, any name you could think of that was involved has seen flow, especially today. Anyone you could think of, right? And just logically looking at that, not everybody is as bullish evenly throughout, right? Throughout all of spec land, right? I'm sure. Again, example, a BE may have, a better story fundamentally and whatever than an Aunt Jemima GMIA may have. Again, I'm just off the cuff here. Between the two of them, I couldn't care less. But what I'm saying is it's done in packs, right? And that's what you usually see when you get this type of climate and atmosphere. Not only is there a performance chase where hedge funds are looking to put on exposure in the big boys, which they already have, okay, they're already exposed to these names, but at the same time, they not even necessarily cover shorts, although they are doing some of that because they're up huge, right? We talked about a lot of these names are down 50, 60% off their highs. So any fund that's been short these names has scored over the last month. So you get some short covering, right, which is buying. And what we're seeing in the flow is a lot of short hedging via calls. So what happens is as these names little by little start to squeeze, if I'm a fund and I'm short, what's the name you guys threw out there earlier? BBAI or a Lunar? One of you guys threw out there, right? If I'm short those names and I see more of these names squeezing, one, I'm either going to cover some of that short, right, and lock in some profit, or if I want to hang in there, I'm going to at least put on some hedges. And the way I do that is by buying calls. Okay. So again, not all of it, but for the most part, what we're seeing is exactly that. Okay. You're getting a little bit of bargain hunting again, where these names are already got hit over a head in a month's time, but the bulk of it is short hedging and short covering, which there's, again, we don't care, right? For trading purposes, it gets the job done either way. A lot of times these short squeezes are even better because you can get that move quicker and sometimes even more violent than if it was just your normal bull market or uptrend, okay? So we're starting to see that play out. That should at least linger, right? And the reason I don't say continue is you got the Fed, which, if there's a more hawkish reaction to the Fed, you could very easily see rate cuts get priced out of the market. Some of these micro caps start to sell, especially if there's a run up into the Fed, right? So it could be a temporary setback, but the short hedging should at least linger through the holidays, okay? And for a lot of you guys who like to trade these names, could set up some decent opportunities. Me personally, okay, and we've discussed this. I don't want to beat a dead horse. I think the easier money, the big money, has been made in the bulk of these names already. Okay, because again, they all had kind of a parabolic blow-off move, right? And a lot of them. Okay, obviously, a lot of people are looking for something similar anytime these things show life, and a lot of times you don't get that, okay? So that being said, I am no way not even close to as interested in these names as I was a few months back, but at the same time, if a name is catching action and it's at a decent spot, and we can talk a little more about that. Most of you know what I mean by that. I'm willing to pull the trigger and take a shot, right? And especially on the equity side. And the reason why on the equity side, I'll give you an example. I bought some of this pig today. Okay. Next door. All right. This is the doorbell. You guys all know it. All right. I couldn't care less if it's a pig, a meme stock, a great story. It doesn't matter. I'm playing it for a squeeze, right? For what I just explained is going on. But, this name started to catch a lot of action this morning. Now, granted, the action it's catching is really cheap, right? You're talking about $10,000, $15,000, $20,000 sweeps. Right? So it's not big boy money rushing in. Again, the majority of this stuff is short hedging. Okay. But this thing starts catching action at a $1.80 and has that much activity. For me, it makes sense buying the stock and seeing if there's some follow through, right? Some more action. If someone does get squeezed pretty hard in this name, maybe I get lucky and get a nice rip out of it, right? In a short amount of time. If I don't, right, I'm kind of going to pull the plug. Where's it go? $1.60, right? I pull the plug. I take a small little loss and I move on. Okay. And that's kind of how I look at it through the equity, from an equity perspective. Options are different. And the reason being, options are a lot different, but the main reason being, one, a stock can do nothing and you still lose money in options, right? Especially if something is getting an IV pump, right? Is seeing an interest. The premiums go higher. You end up overpaying for these things. And if a stock goes dead, so in other words, if this name lingers here and just goes sideways at $1.80 for the next 2 weeks, if you bought calls today, you're likely going to lose money, right? You're not going to get killed, but you're likely going to lose money, right? So that's one. And two, the liquidity is an issue, okay? Well, this stock, while it's active for the time I'm being in it, it's pretty easy to get in and out of equity-wise, right? On the option side, if kind of the action goes dead or these things go sour, the volume dries up and all of a sudden you're dealing with calls that the bid-ask spread starts to widen out, the volume starts to dry up, and they rob you, right? So there's a big difference. And the reason why I want to get that point across is, hold on a second. Who's calling me now? The reason why I wanted to make that point is because, especially those of you in the steam room, if I'm taking a shot on a name like this, I just want you guys to understand how I'm looking at it, right? I don't want somebody to go out there and start buying Jan calls and taking out offers, and then they get stuck and they end up taking a nice little hickey, right? Again, 2 months ago, and as many of you know, I would be all over all these things, right? Because the majority of these would be new names, fresh blood. This micro cap, small cap, short squeeze or mini bubble, it was just starting, all right? Now it's kind of deflated and we're catching kind of the remnants of it. Another thing to keep in the back of your head, if you remember, we kind of used the 2021 blow off top as an example to what we were seeing into this high. Now, it was a complete different backdrop in 2021, right? A lot of things were different. The price action was very similar, all right? But what happened in 2021, you got kind of these mini squeezes generally across the board in many of the names that came off their highs 50, 60%. But net, they were just kind of stuck in a range for months before they rolled over again, right? And I think the takeaway from that is, as long as you're kind of if you're sticking to being somewhat disciplined, buying at decent spots, not chasing after the move, and taking the rip when it shows up, right? Locking in some profits along the way, you should be fine and likely have some decent fun while you're at it. Okay. I think where you can get into big trouble is if you're treating this the same way we were treating this 3 months ago, 4 months ago, whatever it is now. Okay. So I just want to make that point. But again, you have a lot of these names are set up for a bounce. We kind of been talking about that. Like here, again, I personally, as I mentioned, I've been gun shy, so I haven't carried these things overnight. I've been day trading them primarily, any of these type of names I play. But like a TMC, they came in, they started buying, and you got a little bit of a bounce, a nice little bounce here. APLD, very similar, where they came in, and you got a nice little bounce here. But it was very erratic, right? Like some names that you definitely thought would bounce, like an Irene. Whoa, what is that? Had haven't bounced yet. All right. And that's, again, this is totally normal to see this type of kind of randomness behind the price action, right? As they're coming out of a correction. Okay. I think what would be the healthiest way for these things to play out, if you still are interested in these names, and I'm sure many of you are, I am, okay? You want them to kind of go into quiet mode and digest, right? It's more of time than anything else, okay? Wear out bulls, wear out speculators that are coming back in for another blow-off move, okay? And then as we get into, through the first quarter of 2026, these things have digested and consolidated enough to where the quality or the more bullish of these names have a shot to break out again. Okay. What you don't want to see, unless you're looking to make the buck quickly and trade these things, which is fine as well. What you don't want to see is these things start to make new highs and kind of get a little frenzy type mode going on again, right? Because that's not going to last. It's not going to last. Okay, so it'll be fun and profitable if you're extremely tactical about it, okay, and careful about it. But if you get sloppy, as we've seen, I mean, people have been decimated already by the correction in some of these things, right? And you see, like, even with Bitcoin, because of how levered people are, Bitcoin's at 100 grand and it's the apocalypse out there, So because these are players who have came into the move late, chased, and expected, things to just go straight up every single day, where it just don't work that way. All right. So that being said, I think in general, right, the little pullback we had, I think, sets up these type of opportunities, not only in these small speculative names, but even some of the larger cap names. I just think they're a lot more difficult. That's the main takeaway for me, is that they're going to be a lot more difficult to trade. Your win ratio, especially that you were experiencing over the past 3 months in these things, expected to go down dramatically. So meaning you want to be disciplined and try to stick to stops and not fall in love, right? We're seeing that in big mega cap AI names as well, right? You're seeing a lot of randomness. A Tesla has looked great, a lot of momentum there. Granted, the robotics team came in and other things, whatever. But like a name like Tesla still has momentum. Where a name like Oracle, has been burying dip buyers for the last month straight, right? Meta got bailed out today, back to where dip buyers started buying. Okay, so it's fine to trade these things, but again, the game is a lot tougher in these things. The game is a lot tougher in these things. Okay, so that being said, on top of that, okay, because of the run we've had overall here on a shorter term basis, okay, we've had a nice lift from these lows. You got a lot of short term sentiment starting to warm up a bit. Okay, because generally everything for the most part has had a nice bounce. Even cyclicals, which we're going to talk about in a second. Okay, some of the sentiment indicators, like for example, the hedge fund exposure, you back up to high of the range here, right? So that process is already playing out, chasing. What was interesting is AAII, which is a weekly sentiment survey. Today you had the lowest percentage of bulls in quite a while. All right. So this has kind of been stubborn, right? Because even as the price action has been uber bullish, even as the more speculative names have gone bananas, even if the word bubble has been mentioned a gazillion times, a lot of these surveys really weren't showing much of that bullish euphoria you were expecting. Okay. I wouldn't say it's anything crazy here at 44% bulls, but what caught my eye is 30% bears, which is low. So again, just telling us that even on a shorter term basis, you're a bit extended here, right? You're a bit on the warmer side. Stuff we look at like tactical sentiment, you're dancing just shorter sell signal. The short-term sentiment comp, which I've shown you guys a few times on here, this thing came from under 10 single digits, right? And we're kind of brushing against 60 right now. Yeah, nothing, no glaring warning signs, but just understanding that there's a higher probability of risk of a rinse at some point on a short-term time horizon, okay? So again, I think it goes back to just being smart about things and stuff that's been extended and already has moved a significant amount. You know, even if you like the name, it's probably prudent to let things settle in, and you probably will see better prices, even if it goes higher before that, okay? Another thing I wanted to remember to tell you guys, let me see if I can pull it up on this chart here. Let's see. Yeah, this should show it, right? The S&P 500, not fungal, the S&P 500 and the NASDAQ, you're going to be running into an upside niner tomorrow. Okay, here's ES, day 8, NQ, day 8. Okay, so again, end of the world? Absolutely not. But we've looked at this. Those of you who've been on this webinar know by now, right? Upside niners, a lot of times you'll see some sort of digestion or sometimes a short-term rinse, right? You had one here, right? And it led to a little bit of a rinse. You had one here, and you got a little more of a rinse, right? Here, quicker little digestion. Here, whoop, where'd it go? All right? So just something to acknowledge. Again, these are more reminders that as you're feeling bullish about things, and you probably are because the price action has been strong, there are some signals out there that are telling us on a shorter term basis to possibly chill out and wait for a better opportunity. Okay? And again, these things help out, especially in options where, you know, if you're buying into an upside niner, one, you're getting all junked up into implied vol that's already probably jumped a good amount. All right. You're buying a name with a high probability of a rinse. If you're buying the highs and then there's a flush 2 days later, your premium, you're going to get wiped out, especially if you're in front month, which a lot of you play. All right. So these are things to just be aware of, right? Yeah, here, niner, little rinse, and then niner here with something a little bit more, right? A lot has to do with what else comes with these upside niners to kind of get a gauge whether the digestion probably needs to be longer in time or deeper in price action. This can very easily just be a pause here if we get it sooner than later. Okay? So again, the main takeaway is on a shorter term basis, we're a little bit heated and we could use a quick rinse or some digestion. I also like to look at internals, okay? And as you can see, for the most part, the majority of stuff on a shorter term basis are heated, okay? Again, on a shorter term basis. So these are just all things. I'm trying to stick with the more tactical stuff here because that's where the excitement is through the holiday season. All right. I mean, me personally, I don't want to go too crazy during the holiday season. I want to try to stick to decent setups, be a little quicker. But what I'm kind of focused on, and this is what I want to spend the majority of time on this webinar with you guys, is, yeah, we haven't met in, I think, a couple of weeks, but most of you remember our conversations in the Steve Room. We've been talking about it a lot more. Going into 2026 and the setup into 2026, right? And, you know, we spent a lot of time over the last month or two just discussing the positioning backdrop of things, right? How, you know, you hear a lot of bubble talk and you hear a lot of concern about the market being overextended and too many bulls. And yes, in some pockets, that's certainly the case. But in a big portion of the market, right, if you remember our conversation, we kept bringing out the point that in some major, big, important sectors of the market, they're extremely underowned and have no exposure, right? And a lot of them are tied to cyclicals, economically sensitive type stuff, if you remember our discussion, right? For many reasons. The interest rates, the Fed, the economy, all the growth has been in AI, right? Nothing else really has been that sexy out there. The growth has been blah. So there are legitimate reasons behind it. But that being said, it's already priced in the market in a sense, right? Like, no one can tell you that all the growth is in AI because we already know that. Look at these stocks, right? Look at the AI stocks and what they've done. Okay, that's why they've done what they've done. Okay, now you flip the page and you look at a lot of the cyclical parts of the market that we've been looking at over the last month, and they're starting to show some life. Okay. And that's where, if you guys recall, that's kind of where I'm licking my chops going into 2026, right? And I'll tell you what I'm looking to do, in positions and how I want to kind of set myself up to try to take advantage of it, right? Many of you know that IWM has been a big play on that even before now, right? I have still IWM March calls that I've had from a few months back, before kind of the small cap move. I'm still holding those. Just recently, last week, I added back some of that TNA, which I had taken profits in, again, a few weeks back. So small caps are a big part, at least the index, okay, is a big part of how I want to initially take advantage of this into 2026, okay? Because my feeling is that if we can avoid the Fed being too late, right? If we can avoid a recession, then these parts of the market are significantly underowned, in my opinion. There is no exposure to these groups, none, right? All again because a lot of them are interest rate sensitive, and the Fed has been dragging their feet when it comes to cutting rates. All right. So if things start to go right on that end, and little by little, you see pockets, right, of light, there's a light at the end of the tunnel. That's where I feel the big ticket is and the huge outperformance is into 2026. Okay. And what makes me feel even better about that is, again, if everybody was positioned for that, right? Or even if people were somewhat positioned for it, I wouldn't be as interested. Okay. But being that, like we mentioned, before the government shut down and we lost CFTC data, you have max short exposure in the Russell 2000 futures, right? We know hedge funds and institutions have done nothing but buy large cap and mega cap tech names, right? So if they end up having a reason and a need to buy this stuff, there's a lot of ammo on the sidelines capable of coming in to buy, right? And that's kind of what I want to be ahead of, right? And I don't want to necessarily stick out my neck in a huge way to be ahead of it, right? And I wanted to kind of touch on that point a little bit today. The way I want, and that's why I'm taking the approach I'm taking, right? So right now, the Russell 2000 via IWM calls and some TNA, which I'll convert into IWM calls at some point sooner than later. And I bought some NAIL initially, NAIL, which is a levered home builder ETF, right? So I want to have that as kind of my exposure where I won't feel that FOMO. And as sweepers confirm this process playing out, because what's going to happen is the more, as this thing develops and as this thing starts to play out, sweepers buying these type of names will confirm along the way. And that's where I want to add exposure, especially in names, in addition to what I have initially right here, if that makes sense. Okay. So again, I use this approach a lot for these type of setups. Again, if you think back to kind of the IWM setup before the squeeze, right? Because of that max short position. What I do, I put on some decent TNA exposure initially, and then as that started to play out, right, sweepers confirmed that that thesis was coming to fruition. I added small cap names as they're being aggressively swept along the way on top of what I have, right? And then as that process gets a little longer in the tooth, that's where I trim some of the riskier stuff, the levered ETF and names, and I park whatever I want to hold on to into longer dated options, right? So it's a common approach. I did it with the small caps on even so. I did it with the gold miners a year and a half ago in gold. Many of you may remember. Again, it's just something I feel really comfortable with. You may have a better approach, a better way, but I just wanted to explain to you my process, okay? And again, that process is not going to change. So if you're wondering, like, why am I not buying any cyclical that's catching sweeper activity? If that's what if I'm so interested in it, why am I not doing that? Because again, I'm looking to be patient because it protects me. And if I'm wrong, right, sweepers will not confirm it in the way that I'm right. So I will have to unravel some of my early holdings, my key exposure, but I'm not sticking my neck out in a huge way to where if I'm wrong, I'm going to get lumped up completely. Make sense? All right. So that's kind of my game plan. So you guys know, especially those of you in the Steam room and, those of you following along on the webinar. Okay. Small caps. I got some exposure to the home builder ETF for now, and I'm looking at other types of cyclicals. Many of these, they're ugly names. They're ugly names. These aren't the names we like to play. These aren't the names I like to play. Right? We talk about like the trannies, the transportation sector. Right? That's another group that kind of is breaking out a little bit here. All right. So then you may have a different preference than I do. Me, small caps are going to be a big part of it. And I want to kind of sprinkle in some of the others and then play names along the way. Okay. The sexiest part about this trade, which probably, again, I'm thinking for you guys as far as what would be the sexier part, similar to kind of a growth story, because nothing's better when this sets up on the growth side. Because, again, you got tons of stuff to play. And the names are just better to play. But think of cyclical semiconductors, which have been breaking out. I don't know if many of you have been paying attention, but a name like AMAT has been explosive here recently, right? And we started to see some of the others come to life, like a TXN this week and stuff like that, right? A TER is another really good-looking name I know quite a few of you like, okay? So there are some sexier parts, especially in tech when it comes to cyclicality and the cyclicals. But for the most part, we're growth stock players, the majority of us, right? Especially the majority of you guys, right? You're trading. I think here's where I think a lot of people are going to get into trouble, okay? If this does play out this way, traders, especially on the retail end, are so trained to look at the same large cap names that before they even figure out what's going on in the market, they're going to think the market's dead, right? Lack of participation, not healthy. God only knows what excuses they're going to come up with because the names that they've been playing for the past 3 years aren't outperforming, right? And I think that's where I think the biggest risk lies. Is not that these crowded names crash and burn, right? They're good companies. They're just over-owned. You might get select situations that run into trouble, okay, like an Oracle as an example. But for the most part, these things aren't going to crash and burn, in my opinion. You're just more than likely going to see underperformance. And I think that underperformance risk is the big risk when it comes to a lot of that area of the market because they're so overowned. The beauty of it, though, if it does play out right, let's say if you could have your way into early 2026, the first 2 quarters, cyclical led rally, cyclicals outperform, growth underperforms, value outperforms. And then when everybody catches on halfway through the year, you know what's going to happen. Whoop, flip flops, goes the other way, because now people are rushing, chasing cyclicals because they had no exposure and they've been selling all these other names. And that's where the setup is. If you don't think that happens, you're nuts. Okay. Coming out of 2022, now again, it was more of a bear market, but the mega cap names and the names that everybody stares at all day long right now were the most under-owned part of the market. All right? I brought that point up to you guys a million times. It happens. It happens. Right? We're already seeing it, guys. Like, if you rewind to our conversation, when was it? Over the summer, about kind of being in the small caps, they'll start to hopefully outperform. And what you're going to see more in mega cap land is not a crash, but you're going to see a lot of randomness to it, right? You're going to see one mega cap looks great, the other mega cap has been dead money, and the other mega cap has looked like shit, right? And it just gets more erratic. So this process, in my opinion, is already underway. It's already underway. I think if this cyclical bull really catches fire going into 2026, you're going to see big time fireworks on that end. Big time fireworks. Big time fireworks. So that, and many of you know this. If you've been on this webinar, obviously you're in the room, you know that I've been interested in this, right? Since I started buying IWM. What I've been really waiting on is confirmation, especially out of the flow and the price action, that the street's starting to recognize this. And even though it's been gradual, there are definitely signs out there that this is underway. Again, we talk about like some of the ugly names to own, like a Freeport, right? Again, these are all, more than not, they're always difficult to start, but when they start to click, that's when they're gone. I give an example. We were talking about this today. This CCJ, when it started to catch aggressive buying and there was a shitload of it, this stock was the worst stock in the world to trade. The worst stock in the world. Every time I played CCJ, it's not that I even lost money. It did nothing. This thing was a turtle. It couldn't get out of its own way. But again, its time came. This whole uranium bull market really heated up. The flow confirmed it in a big way. And even though it was sluggish initially, still, it was a tough trade. Right? A lot of ups and downs along the way. Once it got going and the big move came, it was gone. Okay? So, again, if you ask me, right, if you kind of see the market this way and you agree with kind of what we've been talking about, I think that the smartest approach, again, not just because I'm doing it, but the prudent and more conservative approach will kind of be the way I'm doing it, right? Pick a couple cyclical spots that you like. Right? May not be the small caps. Maybe you want to go mid caps. Maybe you want to go consumer discretionary, right? Maybe you want to go trannies. Maybe you want to go home builders. Right? Put a little exposure on early so you dip your beak and you're in the game. And then, like I said, as sweepers confirm, let me tell you this. If there's going to be a full-fledged cyclical bull market, I know for shit sure sweepers are going to confirm that along the way. We're going to see them light up shit. Okay? Like FCX in a cyclical bull market catches missiles. Many of you don't remember that. Okay? But when FCX is really bullish, it catches $1 million sweeps like they're nothing. Right? The steel names, right? Which we talked about, like the Steel Dynamics, which caught some nice recent action. Okay, these things become leaders, right? And when they start to get the attention of the street, that's when you see the flow explode. Now, the point I'm making is that sweepers are going to confirm that along the way, right? So maybe a Steel Dynamics, which already caught some flow, it's up over $200, but there'll probably be other steel names that it's spilling over into that are starting to see flow now. You understand that we could participate in. And if you got some exposure already in these groups, okay, and you're waiting for that sweeper confirmation to add on, you're sitting in the cat seat, as they say. Cat seat? Bird seat? One of the others. All right. But again, it's a lot more frustrating of a trade than in growth. I'll give you another example, like the banks. Okay, they're part of this, and again, you guys have probably heard. I know in the steam room yet. What are sweepers buying in financials? Right? What's their name? What's their go-to name? Hands down, Citigroup. Every little dip in Citigroup, we see sweepers come in and buy the piss out of it. Every dip. Now, you look at Citi, and you have a nice move here to new highs, but look, this is what you kind of sit through. You understand? It's not bearish, but it's kind of like you gotta be in it, right? I don't know. It's maybe not a cleaner move, not a smoother trip, as we say. They're different type of names. They're different type of names. Okay. Now, what I'm kind of unsure about is more on the speculative side of things. Okay, that's where I don't have an opinion yet, and I'm hoping kind of the flow can push me in that direction and confirm it enough to where I have some conviction. Does this trickle down? See, here's the thing. If small caps are going to be a part of this, okay, it's likely not going to be driven by small cap spec names. It's going to be driven by other parts of small caps. Value small caps, quality small caps. Does that make sense? Right? So that's where I see this thing working out properly. The spec side of them, I'm unsure about, because I think the spec side relies more on liquidity and stuff like that, where, according to some of the liquidity people I follow, as you guys know, they're not too bullish on the backdrop right now. And they haven't been, and they've been right? Look at Bitcoin and look at the little mini crash in a lot of these speculative names. So that's where it kind of gets tricky, because, and the reason I bring that up, a lot of people say, oh, look at this steel stock. And, it's a $3 steel stock that went parabolic with the rare earth plays. And, people want to buy it just because it's steel now, thinking it's a cyclical play. That's where you got to be careful. I think especially initially, right? Because again, this didn't even start yet. It's just starting now. Okay, I'm not talking about a mini rotation. I'm not talking about your run-of-the-mill rotation. We see rotation into cyclical and value every year. I'm not talking about that. I'm talking about a full-fledged bull market. Okay, that's different. That doesn't last for a month or two and then run out of steam. You understand? That will be 2026 and spill over into a million other areas of the market in relation to that. You understand? So if that happens, you're going to see a lot of different type of names, and they're probably going to be a lot more quality than we're used to over the past few months. Yeah, like KRE is a part of that too, right? So KRE, Also, by the way, those banks, if I'm not mistaken, they make up a decent portion of IWM, I think, right? Some of the regional banks. So, like, if they catch fire and they're part of that cyclical group, that's like one of the key drivers of an IWM. Okay. Now, again, do we want to start buying regional banks? Right. Me personally, unless flow shows up in an aggressive way and I like kind of the setup and the spot there, I'm not jumping out of my shoes to buy individual names in regional banks. You understand? I'll put on some DPST exposure, and if I catch an early move in it, I'll roll it into KRE calls with time. You understand? So it's a different approach I'm taking here as opposed to kind of that quicker money. All right. And I think that's a perfect perfect setup to what I really wanted to mention on this. It's like, because it usually is a big problem for me. I don't want to mess up this with all other noise in between. You understand what I'm saying? So in other words, like, this is where my focus is on. And it's been kind of my focus for a while now, but now that it's starting to come to life, I want to even be that much more focused on it. The stuff that I do in between, I don't really want it to take up too much of my time and attention. And listen, the day-to-day moves and the quick trading in and out of some smaller name or a TSLL I play because Tesla's getting lit up. That's not my focus right now. That's to buy me time, get me through kind of the dry spells. But where I want to pick up the money is what I just explained. Yeah, and that's why I say here, like, and because we've talked about this ad nauseum, you and I, but that's why no matter what, like, I wanted to start an IWM position, right? Kind of trade the TNA alongside it, but that IWM position is going to be with me throughout. You understand? It's going to be with me throughout. Again, until this plays out, or I feel like I got to pull the plug because it's falling apart. But that IWM exposure, no matter what, like even now recently, I bought some TNA last week. I might sell it ahead of the Fed. I might sell it ahead of the Fed. And what I'll do is I'll take some of that money of the TNA, put it into IWM calls. The March calls I'm looking to roll out to probably June now. Okay. And, now I'll just add to that pile of IWM June calls that I have. And then we get a little dip like this again. Right? I can put some TNA exposure back on again. You understand? So that's kind of how I want to play it. To your point, I have that IWM and I feel good that I'm in the game. I'm in the game. Super Gal I bought. Well, here's what I did. I bought more TNA last week and I bought this. I think I mentioned to you guys, again, I don't remember with the holidays, the last time I was on the Thursday webinar. But I bought some nail. Again, same process with the TNA. XHB saw some decent buying. That's the home builder ETF, not levered, right? So my plan is to kind of buy some nail, make a little money with it, because I don't want to hold levered ETFs. We don't want to hold on to levered ETFs longer term. You understand? They're not structured for that. You got to be really careful, right? You get caught in a downtrend in levered ETFs, because they're levered, it piles up quick. You understand? So the levered ETFs, I kind of like to time the early part of a move, and then if I get lucky there, take that money and sit in dated calls. You know what I mean? Higher delta dated calls. And right now I'm in IWM Super Gal March 235 calls. You remember the TNA? I think you played it too, Super Gal, if I remember correctly. TNA coming out of the summer, when was it? I think coming out of the summer. That TNA position I moved, I sold, took profit, and I put a portion of it into IWM March 235 calls. So now what I'm going to look to do is I'll probably sell this batch of TNA I bought and move these IWM calls March probably to May or June. And I'll roll up, 250, 255s, because right now I'm at 235 Marches. And just keep doing that. XLRE, yes. Again, that's in this arena, That's in this arena. It's you don't want to get too cute, right? Because you always run the risk. It's certainly possible that the home builders run into a little trouble. It could be sector specific and not participate fully in a cyclical bull market. It's rare, but it's possible. So you don't want to get too cute. That's why kind of like an IWM is a little more broad, so you don't run the risk. But I would think if you like XLRE, right, I would buy a little XLRE, right? So if you want to have some home builders, some real estate, break it up into that. Again, it's more of a preference thing. The reason I sound wishy-washy, Super Guys, because for me, it's all about the flow. You understand? Like, if I start pulling things out of my rear end, that's where I get into trouble. I need, ultimately, for me to get aggressive, I need the flow to guide me. I need the flow to guide me. Think about the rally we had over the summer, okay, coming out of the summer. I was in TNA basically from the April lows, right? TNA was one of the first things I bought, okay? TNA and the Soxel, the semis. But that was just getting my beak wet, right? I got TNA before we started. Once the flow started to explode in small cap land, that's when I was buying all sorts of different names, right? So I had the TNA before the flow really lit up. And then once the flow lit up, me picking stuff on my own was out the window, right? Whatever they were tattooing is where I was going. So that's why I sound a little wishy-washy on, XLRE or nail. Honestly, you know it just as much as me. It's more of a preference thing, to be honest, until we start to see the flow explode. But it's worth being early, and picking some, like I'm doing with TNA and nail, because you can avoid that FOMO and getting too crazy chasing in names. You understand? Because that's where you could get hurt. Like I give an example like this. Let's say, again, just an example. Let's say, again, this runs to like 175 and it's catch and flow, and just because it's a cyclical, now you're buying it at 175 because you're bullish cyclicals, thinking that it can't go down for a week or two. The short-term noise, anything can happen, and you don't want it to ruin your outlook on this, your thesis on this. Right? It means nothing. It means nothing to it. Generally, the approach we want to stick with is we want to be more bullish off pullbacks in any of these cyclical names and sectors. And as the flow starts to heat up in these groups, that's where we get a little more aggressive in whatever they're sweeping up, because that's where the momentum is going to be. In April, I bought Google. Yeah, well, that was a home run. But, here's a perfect example of just kind of the erratic. Google was being written off, right? Google supposedly was being written off as their business is dead. I was hearing. They're so behind in AI, blah, blah, blah. Google and Apple. And meanwhile, you had some money rotate back into these names, and that's where all the hot money's been recently. So again, I just think these names, all these names, they're up so much and they're over-owned. They're just tough. I'm not even necessarily bearish on these things. I just don't want to be. I don't need to predict what Microsoft is going to do over the next 3 months. It's not a mandate. Nobody's forcing me to do that. So why am I even going to try when I know they're so over-owned and over-talked about? Like, I want nothing to do with them. I want nothing to do with them. And it's the complete opposite of the setup that we have in cyclicals. Okay? Cyclicals are under-owned, and if things start to go right, you got a huge amount of buying to come in. A lot of this AI in tech is over-owned, and if something goes wrong, you got a whole lot of selling to come in. Right? And that's what you're seeing. Okay? There hasn't been a lot that's gone wrong. All right? But any little wrong that comes in, and you get an Oracle go from 340 to 190. Right? And let me tell you something. When Oracle was gapping up here off those earnings, there were a lot of people on this Thursday webinar talking about buying Oracle. A lot of people. So that's what I think. Again, you have the luxury that these things have corrected off the highs. That's a plus. Good. But I just think the bigger risk is underperformance risk. The possibility of that into 2026. If the Fed starts to cut rates, okay, if this economy avoids a recession and starts to show some growth, and then you got some of the stimulus kicking in, all right, these are not the names to be in. The names to be in are the economically sensitive names that nobody is in right now. Yeah, but you bought it after this huge crash, Sahil, right? So you're like, all right, I'll buy it. I'll tuck it away maybe. I'm getting it at $200 discount. And whatever happens with it, happens with it. If I got to sit in it, I got to sit in it. But some of the other names, like haven't corrected as much. And I don't think they crash, guys. Yeah, I really don't know. I just think they have the stronger possibility is underperformance. They can underperform. They're going to be much tougher trades. You understand? They're going to be. Think about what we've been seeing. More of that, probably even more exaggerated. Just erratic behavior, randomness. It's going to be random behavior. Right? Apple was the anti-AI play that has been ripping recently. It's just a lot of erratic behavior. NVIDIA, like this thing's been dead money over here with all this bull. Look at it. If you bought NVIDIA into the August highs, you're break even right now. It didn't feel like it along the way, right? You had ups, you had downs, you had chop. But that's what I mean. That's the risk. This is the risk, I think, in my opinion. Especially some of the names that have pulled back. This is the risk. That you may get rallies, right? If you time them right, maybe you get a nice trade out of it. But net, you're going to have high conviction in your trading skills because you're going against the wind in a sense now. You're going against the wind. Yeah, and it happened to be the CDS, the credit default swaps on Oracle spending that did it. But who? You saw that coming? I didn't see that coming. That's what I mean. Things pop up. You understand? Things pop up. Here's the risk in a nutshell. Stock doesn't go higher on good news, but if there's negative news, it can get hit over the head. That's not an appealing setup to me. I don't know about you, but for me, That's not the most appealing setup, right? That a lot of the good news is already priced in, but the bad news I can get lumped up in. Why do I have to entertain that? I'm not forced to play these names. I'm not forced to make a prediction in these names. Why? That's what I can't figure out from people a lot of times. Why? What they got to prove to somebody they called the lows on whatchamacallit, on a Microsoft or a Meta or whatever? Why? No. But again, yeah, I just approach this game a lot differently. You know what I mean? I just approach this game a lot differently. What else you guys mentioned? Let me scroll up here. Did I miss anybody's thing? No, RBRK I didn't add to it at any point. Just have what I've been holding for a while now. That was smart IWM. I'm taking UUP. Dollar traded is so crowded. Dollar shorts was crowded. Is that what you mean? Or you're talking about the opposite of that? I know the dollar, whatchamacallit, the dollar was crowded short, but I think that's kind of worn out now. I think they wore them out. I think. Again, you may be right, Super Cal. Again, this is a tough. These are tough. To me, they're tough trades. You know. Short, so crowded. Yeah. I don't know if it's as crowded anymore, though. Is it? I thought I heard that some of those shorts got squeezed, but I could be wrong. You know, here's like another thing, right? Again, I know some of you gold. It's funny. Gold bulls now are around. You couldn't find a bull anywhere to be found 2 years ago, and it's hysterical. But like even gold here, right? Maybe it goes higher. Maybe it keeps going higher for the deck. We all have an opinion. But to me, setup wise, there's no logical sense for me to try to make a play on gold here. I'm sorry. Where's my edge in gold? What do I know about this gold trade that you don't or the other guy don't? What are you going to tell me about the global debt problem? Like we are not aware that that's not priced in right now. You know? So again, I don't know if it gets killed or what, but I can certainly see this thing go through something like this again. All right? I think that's a higher probability of something like this. All right? Now, again, could be a special backdrop, right? Gold is its own world. It's not a stock. It's a commodity. It's its own thing. Maybe gold keeps going bananas here. But I'm not going to be a part of it. You know? I'm not going to try to make that stake up here. If I own gold back down here, yeah, I would be in it. By the way, which I did own gold back here. The only problem is I don't own it up here anymore. But if I owned it still from back there, I'd probably still be in it. Yes. But to buy it up here, I don't see any logical reason to buy it up here. You know? Any logical reason. Again, just based off the setup. Doesn't mean I have to short it, but to buy it up here is a whole different ballgame. I mean, I don't know. You know, these things sometimes sometimes they keep going. These rallies, you know, they keep going. I just think, you know, from an odds and probability perspective, and that's how you got to look at things. You know, it's just a whole different can of worms now. You know, a whole different can of worms. But you know, we'll see. Listen. I think, and I think we're blessed, believe it or not, with the cyclical setup, because without the cyclicals being set up, there are a lot of things out there that really could go either way. You know, again, liquidity, which is not my bag, but from what we're hearing from people who know a lot more than us, you got a slow leak there, right? Liquidity may have topped out for now until the Fed actually does something. I don't know how that is going to play out. But what I do know is even if there's a slow leak in liquidity and it's topped out, and maybe Bitcoin has topped out for now, maybe some of the more speculative stuff for the most part has topped out for now, financial conditions are still easy, are still loose. And for cyclical related names, that's a bullish backdrop. That's a bullish backdrop. So, you got, for me, I try to stay away from the tougher calls. I'm past the phase of pounding my chest, the I told you so, I can predict anything type of thing. I wasn't really big into that phase anyway, to tell you the truth, because I'm too superstitious and believe in the market gods. But, unless you're involved in that, there's no reason to really get your hands dirty in a lot of this stuff. LVS, that's right smack in the middle of it. LVS is right smack in the middle of it. Again, it's had a real nice move here. So maybe digest a little bit here. But, right, that would be totally just, I'm talking about normal price action. But LVS, casinos are cyclical. Macau has shown some improvement. Hence, the stock has shown some life. And, looking for a major breakout here. All right? I mean, major breakout. These things have been dead money for a long, long time. Long, long time. Win. I would just take, if you can, to buy it, a longer term perspective on it. I think that's where the reward, the nice reward part of the equation's at. You understand? For a trade, again, some of these things have come a long way. So they can pull back, they can chop around for a little bit. That would be totally normal. Right? But bigger picture wise, this is what we're talking about as far as cyclicals. This is exactly what we're talking about. Right? I'm talking about setup. There are some cyclical related names that have AI ties that have just exploded already. Have you looked at Caterpillar? Right? Have you looked at Caterpillar lately? I mean, this is unbelievable now. Cummins engine, which we saw some flow today, CMI. Right? So these things have already broke out and are gone, are loose. Right? These have been some of the earlier names that have broken out already and have been discovered to have been benefiting off AI, ties to AI. So you have, again, that cyclical part also ties to AI, which has been a double whammy. But yeah, there are a gazillion of these type of names. If you look like even like commodity type cyclical, you look at this, like Valet. Who's calling me? Valet. You guys know Valet. All right, that looks like it's getting ready to break out here. It's already, this rip is insane. Rio. Right? But these are all true cyclicals. They're breaking out. They're breaking out. And not a lot of people pay attention to this stuff, including us, including myself, as we're talking about them. These are not the type of names we like to play. Right? But there's a big opportunity in these things, in a lot more. Forget about the ones that have already gone. Right? There's a lot that hasn't even started yet. So just so you guys know, there's like you probably know more cyclicals than I do. Industrial. Oh yeah, I saw that come across Squawk. What happened? Some senator bought a piece of this. I don't know anything about it. Heister Yale. This is it looks like it did right there. Pop, huh? Industrial machinery. Why'd he buy this? I saw the news, PP, but I didn't really follow up into it. Yeah, AB Trader. Listen, whoever the next Fed guy is, it's not going to be Powell, and he's probably going to be a lot more dovish, right? So again, I just think they just have to avoid a recession. You got to avoid of Powell being too late. If they can get into next year, avoid a recession, you got maybe a little slow growth, a little sputtering, whatever it is. You got a new Fed chair in there who is going to be a lot quicker to cut. But I think you're going to see these cyclicals. They're already breaking. Like they're already moving. By the time the next Fed chair comes in, guys, that's when everyone's going to want to buy these things. They're gone. They're already gone. Are you seeing what I'm showing you guys? By the time the next Fed chair gets in, you know what these things are going to end up looking like if we just go status quo until the next Fed chair gets in? These cyclicals are going to be the hottest thing on the face of the earth. I think, again, the risk is the Fed drags its feet here, and you get they're behind the curve a little more than we would like. And honestly, again, risk. I think you get you get a legit correction. You probably get 15%. The cyclicals probably give back what they just put up as far as gains, but at that point they're going to be screaming buy. At that point they'll be screaming buy. But that's the risk. Again, it's not like these things haven't done anything. They've rallied, but I'm just trying to make the point that these things have rallied, but the reasons we're talking about hasn't even really taken hold yet. The reasons that we're talking about them rallying. Roblox. There hasn't really been a whole lot of flow recently that I remember in Roblox. And it's not a cyclical, so I don't know. Not to say, again, maybe Roblox works for whatever reason. It's just not really it's not the theme we're talking about today. But you got a nice correction here. I don't really have any opinion on it. I haven't seen any real flow to give you my opinion. That's where the opinion would come from. Speaking on that, these type of names, this looks interesting, right? Longer term with that big insider buy. Dash. DoorDash. That had a big insider buy there. That's that type of name. What other? Here's some financial type names. LC, Lending Club, right? Benefits from rate cuts, starting to move. RKT, which they love to buy this thing on dips. These are the names catching flow that I'm sharing with you guys now. This caught some action recently. A trucking name, has been moving nicely. KNX. A few of you, I think, were curious about like kind of the FedExes of the world and stuff like that, and UPS, which looks a little worse. Yeah. So yeah, these are the traditional cyclical names here. CX, what's that up to? Good old CX. Look at this, okay? I mean, this stock is molasses, but this is, you can't draw it up any better, people. This is pure cyclical cement. And you remember the flow in this, right? It's just really slow. Really, really slow. Stub. I didn't really, nothing to catch my eye. There's been mixed action in it for the most part that I noticed, but there could have been a call buyer that I just didn't put much. Let me see. Hold on. What happened? It's frozen. Oh, maybe they're doing work on this. I'll show you guys before we wrap it up here. I'll show you guys some of the notable flow from today. StubHub. Jan, 12.5 calls. You had a little bit of volume. It looks like on Stub. You know, again, I just invest. I don't have a strong opinion on this. Like, if they come in and bomb StubHub down here because of how much it's down, if you like it, I say you fire. Off the flow today, I don't think warrants that. But this is kind of just in no man's land right now. You know what I mean? I don't know where you put this. Like this is the kind of stuff like I need flow. Otherwise, I need notable flow. Otherwise, I don't have an opinion. I'm just being honest. But I like that it's down here, right? That's what I like about it. I need them to light it up. See, if this was 4 months ago, 5 months ago, a StubHub, I probably buy here off the Jan action. Maybe that's why you're even asking about it. But we're not in the same environment we were coming off the April lows. We just the whole environment is not as bullish. Like coming off the April lows, I just wanted to own shit. Anything, I wanted to collect stocks. Now I don't want to collect stocks. I want to make a bet on the cyclical part of the market. That's kind of the way I'm looking at things here. So I would say let them, if you like it, let the flow force you in, right? Not just bull flow. Let them aggressively come after it if you're not sold on it. That's usually what I do. Here's another example, right? Okay, just giving you guys an example. I bought, many of you know, I think you guys played it with me, NEO. Okay, I made a nice hit on NEO or very similar action. Oh, I didn't post it? Oh, I didn't post it yet. Hold on. So I made a very similar, I bought NEO of similar action. Okay, they inhaled these May calls today in NEO. 50,000 of them. Okay, now NEO got hit over the head here recently. Right here, look. Here's where the flow came in NEO, and look at that move. Okay, so basically where they hit it here off that consolidation, they're coming in and hitting it here. I really like the spot. I like the spot here. Like it can definitely bounce by accident here, right? But this is not the same backdrop that we had over the summer. in the summer, anything that they were lighting up in single digits, I wanted to buy. Now, with liquidity and shit like that, I don't know how these things fare. I don't know. I'm being honest. I don't know. I think there could be a bounce here, though. But, May calls, they're not just going for a bounce. That's decent time. January, February, March, April, May, 5 months. Like, I didn't know May is the 5th month. I had to count them on my fingers. But so like for your stub, I would look for action like this. Something similar to where it sticks out. That even if you don't like it, even though it's not in play right now, they're bombing it and it's worth a shot. Like if you like NEO, if NEO was a name you're eyeing off this correction, right? It's down what? 70%, 60%, 8 to 5? No, 40%. This is the action you wanted to see here. May 5 calls and they ate them up. Now, but here's the risk, right? Just so you guys know very quickly. One, here, okay, you had the perfect setup for these type of names. The more speculative it was, the better. The cheaper it was, the better, right? You had the liquidity spigots on full force, and they were buying the living daylights out of every speculative name you could think of. Okay, initial buying. Now, okay, the stock goes from 2 to 8 and sees, I don't know if you guys remember the flow in NEO. I bought it for a reason. They bombed NEO, okay? Now, what they were doing here, these big buyers here were rolling here, right? They do it all the time. We see rolls, okay? These rolls are now underwater. Now, if they still want NEO exposure, they're not going to leave, let's say Jan, $9 calls, $10 calls, $12 calls, whatever they rolled into, right? They got less time and the delta is depleted. So what they're going to do is probably buy something like May 8th and replace that back with that. So you run the risk of buying off action that is not fresh buying. It's replacing rolling exposure. And that applies to any name that had that move and caught all that flow. Any name, there's no exceptions. That applies to all of them. Okay? That's the problem with buying the same names that got tattooed or that early in a correction. You run the risk of tailing rolling exposure. Right? But again, if for a bounce, right, you can make the argument. So I just want you guys to understand, why it's this buying is different than this buying. All right, makes sense? You guys understand what I'm saying? Like, let me show you quickly. I'm sure you believe me, but this NEO, okay? Let me see if I could go back in time because it probably sticks out like a sore thumb on here. Oh, 99,000 September 3.5 calls they bought that day. 99,000 September 3.5 calls right here. 99,000 there initially. Okay, that's what was so noteworthy about that. Okay, then as it did this, there was more call buying, right? And as you can see here, I'm pointing out Solid action again this morning, but definitely replacing some of those 99 September calls. Okay. So all that rolling up here, eventually that last batch goes underwater. They know that's going to happen. And you run the risk that buying, today's buying, can be replacing those rolls. You understand? So you can't weigh the action here the same way we weighed the action back here. Right? Logically. That's the problem. Any name that applies. BE, same shit. Irene, same shit. Aquo, same shit. They all have that risk. All right? Ideally, what you need to happen for the flow to really kind of eliminate that risk in a sense is this. You need a couple months of dead action where the flow is just dead. There's no rolling anymore. There's no action. Nobody has an interest in it. They think it's game over. It's dead money. And then all of a sudden somebody comes in and accumulates 50,000 contracts. But, it takes time. It takes time for that guy. So just so you guys understand, why I kind of brush off the flow in a lot of these repeat names, even though they've come in a lot. You like to see more buying come in. Yeah. So listen, again, if you're playing for a bounce, I think it's worth a play here. So the way I would approach it is I would buy it, but I wouldn't, even though they're made calls, I would protect my downside. You understand? Just in case it is a roll. But because this is so oversold, this thing can bounce by accident to 6.5 by accident, right? So it's not the worst spot. But if you're talking about a name to build a nice size position and give it time, you need at least a month to 2 months of dead flow, quiet. Right? Because what happens is anybody who is underwater and rolling would have already rolled by now. Right? You get some of the dip buyers who are trying to catch bottoms in this thing, they gave up. Right? Because the stock's been dead now for 2 months. Sometimes it lasts longer than 2 months. That's the problem. And what I'm telling you is in 2021, all right, all these stocks went dead and then they rolled over before that could even happen. So GameStop, look, okay, GameStop had this parabolic move, came down, had another parabolic move, right? People thought, oh, here we go, $500, let's go apes. And then look what it did. You see all this? Look at this menagerie. Look at this. Right? You had a few pops in here. They don't look like much. 30 to 50. 30 to 50, that rally is. But net, it kind of went nowhere. Look. Look how long. Look at this. All right? And, a lot has to do with how much buying went in. Right? Everybody and their mother was buying GameStop in that rally because of Kitty Cat or whatever the hell his name is. So that's what makes these names so tough, people. So tough. But again, at certain spots, if you like it, they're worth a shot. You know what I mean? They're worth a shot. Again, at highs, if you remember, I felt it was my job to talk you guys out of buying these things up here. Right? In October, I hope you could tell by my tone and everything else that I felt it was my duty to make sure no matter what flow you're seeing, no matter what, do not put new risk up here. Right? It's all the ingredients of a blow-off move. It may continue higher for a few more weeks or whatever it is, but you do not want to put new risk up here. Now they have at least been chopped in half at the least, right? So you can make argument for trades here. But again, it's not my focus right now, these names. Right? The money's been made there. Like again, the opportunity, I think, is elsewhere as we get into the new year. For now. XPEV, yeah. Well, that's another one, right? There was some big leap action in XPEV. You know, and these are China too. So you add another little wild card into the mix. You know? But again, it's just not, I don't have to make a call in these things. So, you know, it's not worth it. Too difficult for me. Too difficult. Yeah. GE, I posted the action today. GE buying it, but you know, again, GE, look, right? You don't have no hidden gem here, Delgado, as you know. This thing's a beast. You know, this thing's an absolute beast. All right? You know, guys, it's just these names have hatched, a lot of these names. You know, they've hatched. They've broken out and then some. Again, not that I'm ever going to sit in it long enough, but I'm looking for the next GE, right? That's generally what I'm looking for. And it's not even that I'm going to catch this whole move. It's that there's less risk in where I'm playing them because I know I'm not going to catch a move like this in its entirety anyway. So when I say the next GE, I'm not even talking about the same type of upside, but something that is just being discovered by the street, right? Not that everybody's already in. You know, like anything bullish about GE is already in this stock. It's already here. You don't know anything that somebody else don't know about GE and not positioned for it. All right? There's so many names like that. So many. Right? Like these things. Okay? Again, fundamentally, these are the best stocks on the board, right? Earnings growth, multiple, not that high, all considering. But it's just, look how much good is priced into this stock. Right? Just digestion alone is a risk. That's the only argument I make. Right? Like we should spend our time focusing, all right, what's on the next WDC breaking out that may be catching sweeper activity that not many people are aware of. I want to spend my attention spent on that. Right? Up here, WDC has already caught flow. WCDC has already exploded. WDC already has printed ridiculous earnings growth quarter after quarter now. Yeah, no doubt. Well, that's basically Sahil. You're 100% right. That's what we can move quicker than institutions. You know what I mean? Like when institutions are buying a WDC, okay, they're buying it in a range of $40 to $55. We're trading in that range, right? We're buying and selling for a profit in that range, and that's where an institution could just be accumulating. But the point I'm making is this, no matter what bullish nugget you're going to give me, This is already here. It's already done. It's already in it. Right? You run the risk now of not even negative news that the stock just doesn't benefit anymore of bullish news because it's already factored in. Right? You've been seeing more and more in that in the mega caps, like an Nvidia and a Microsoft. Has Nvidia said anything bad ever over the last 2 years? No. But there have been periods where Nvidia has been dead money. Right? What's Nvidia trading at? 25 times earnings? There's nothing wrong with Nvidia fundamentally. You know, it's just basically that it's already factored in. You know what I mean? It's already in. Right? All the information we're looking at, institutions have more than enough time to position. To Sahil's point, though, like a lot of the newer names we see that kind of catch sweeper activity explode and the fundamentals are there, that's from institutional buying coming in after a lot of times we're selling. Right? We see that a lot. Like we see a name break out and then we see Druckenmiller's taking a position in it, right? That's all that buying coming in. That's pushing that up higher. But you have a lot of stocks that are up huge for a while now. They're up huge. They got unbelievable fundamentals, crazy growth. They're up a lot. You know, they're priced for perfection. You know, the big money is made when a stock is just starting to break and you notice, oh shit, look at their numbers. That's where the big money's made. You guys know that. It's not, oh shit, look at their numbers. The stock's up 500% already. Right? It's, oh shit, this stock's just breaking out. Look at their numbers. You know, that's where you lick your chops. There's nothing better than that. Nothing better than that. But there are a lot of names that are already up huge with great numbers. Well, that's why they're up huge and have stayed up huge. Mizuho out saying Meta, significant rally ahead for Meta. Mizuho. Even Meta, and again, I'm a long-term shareholder of Meta. I'm rooting for Meta. But, nothing, what was bad? They're spending too much money, right? They find any cockamamie thing, the stock is up huge. The stock is up huge. Huge. So here, it's going to get antsy. Here's one I remember getting pushback on. Ranchero's little baby. Okay? Costco. Right? People act like it's never going to stop going higher. Costco. You see their numbers? You see what they were just opened up a thing in China. I get it. Why do you think the stock did this? So this circle is kind of where I started warning some of the people on a webinar telling me about buying Costco. Now, granted, if you traded this over the next month, good for you. But this was the risk, right? You expect to be Houdini to be able to time this perfectly and get out of the way before you get caught. And again, there's nothing wrong with Costco. Nothing wrong with Costco. It's just digestion. It's just normal digestion. Did that start going higher again? Super Dow? It did calm down. It digested a little bit. Yeah, it digested. But this is a good little stock too. But you see, like this here, This is normal. This is normal. Even I'm talking about even in a bullish scenario, this is what they do. Right? They trade in a range over time, and if things remain bullish and earnings keep growing, right, they set themselves up for another leg higher if their earnings keep growing and justify that move. But this move prior to this was insane. Look at this. Right? I mean, 25 to 115 in a straight line, basically. Right? So again, we're at 115, 120, Shark Ninja. I don't want to, I don't want to hear your bullish thesis. I'm sorry. At 120 up in a straight line. Okay? Where were you at 30 and 40 and 50, for Christ's sake? Well, now you got some digestion over how long here? Like 2 years? You still bullish in Shark Ninja? You got a better shot. No, but this is, the numbers were insane. You know what the problem too, Supergal, supposedly was tariffs, the fear of tariffs on their product. Well, look at these numbers, okay? Now you had these numbers starting to print. Look here, bro. They came public and they're printing $1 a quarter a month or two after they went public. Yeah, that's what we want to find. Right? That's what we're looking for. But yeah, it's hard. You don't get too many, especially on the retail end, who get excited here. What gets them excited is this. Oh my God, do you see how much it's up? That's what excites them the most. They look back, they're looking back in history thinking that it's going to play out in the future. And that's not how the stock market works. Well, I mean, Pants, you laugh. I mean, has been acting okay though, right? I don't understand this name, like why it's been so bad. I don't know why it's been so bad, Pat. There are a lot worse stocks out there in this universe that have had crazy moves. I don't know why this path had so many sellers. Well, maybe now it's a hockey stick it's been in, but this is not the worst company in the world. 400 million for the quarter, profitable quarter, right? I mean, I could show you zero revenue companies that have gone parabolic. But it's just, again, I think the risk is the mess here. You're in this mess. And you get a lot of the speculative crowd in there. I think, Altucher, I think he's pumping it as a takeover target. But again, if you like path here, I'm not going to talk you out of it. Like I would talk you out of any of these parabolic names. If you like path down here, right, and you give me your bullish case, you can make the argument it's not in the stock. People aren't positioned for that. If your thesis comes to fruition, your positive thesis, there's nobody positioned for that. Like the other stocks I showed you up in a straight line. So, I'm not going to rebut you on path. The other names, I'm just making the argument that, again, not that you don't know what you're talking about. You could be 100% right. But the stock may not go higher off of it because it's already up 1,000%. Right? If you're right about path, you're likely going to make decent money on it. Right? Where a name up 1,000%, you could lose money on it. But yeah, I'm not going to talk you out of path if you like it. I don't know anything about it. It does catch flow though. It catches flow. it usually gets lumped in with the speculative names, you know. But there's been active days in past. What else quickly? What was some of the other floats? You had Neo, that speculative name that I bought. That was cheap action though. That wasn't really top action. What was the other action I put on the top bet list today? Hold on. And then we'll wrap it up here. Another spec name, Aunt Jemima. What was it? February 10s. Nice looking sweep there, Aunt Jemima. Yeah. This is where they started buying Aunt Jemima. My God. I mean, all these things had crazy moves, man. What else? Cummins, I mentioned to you, right? This CMI, there was some unusual buying there. This thing is red hot. And what else? Oh, UPST saw some play. Short-term play, December's. But a good-looking squeeze. You know, it's squeeze name. December 50s, UPST. Anybody like this one? This thing might be able to squeeze. It's already squeezing a little bit. So that was the best flow on the day. In Neo, heavy May action, May buying, repeat buying, UPST, Aunt Jemima, GMIA, Cummins. Oh, EAT caught some sweep, EAT. That's a food name. Yeah, you talk about cyclicals. You got so many. Like we talked about, if you remember the hotels, you don't see, like you guys don't even remember. You don't even see sweeps in these names anymore. This Marriott used to catch the best looking action. Not even that long ago. It wasn't even that long ago. Missiles that used to catch. Hilton, right? But you see, you don't hear a peep about these names. Look at these stocks. Look how strong they are. And nobody's talking about them. Nobody even knows they're publicly traded anymore. Right? You don't hear jack about this group. Look at it. Yeah. Yep. Nike would be considered. Yeah, retail in general is cyclical. Like consumer discretionary, okay? Like it's funny because you look at consumer discretionary and it looks pretty strong, but it's Apple and Amazon basically. Every other group in this index, nobody owns. Zippo, nothing, no exposure. This is, as a whole, one of the least exposed to groups on the street, consumer discretionary. The least exposed. So again, if you get a cyclical-led rally next year, right, and that's, again, a bet on the economy growing or improving via rate cuts or whatever it may be, this group likely leads, right? It should be up there with the leaders. Now, the only way you can run into a problem is if Tesla and Amazon shit the bed for some reason, which shouldn't happen. You know, Amazon hasn't gone bananas. Some people make the case Amazon may be an opportunity there. And, you know, Tesla has gone through its share of shakeouts. So, like, at the least, what? It stays in this range over here, you know? It shouldn't be a huge burden. But, you know, as a whole, this XLY makes sense as part of that cyclical play. You know? The names are the tough part, soccer boy, you know, like Nike. These are turnaround plays. You know, you run the risk that a Nike does something wrong and is left out. You know what I mean? again, if you see flow, if we see aggressive sweeper activity, then it doesn't matter, right? You shouldn't care what I say or anybody says. If you like the name and they're aggressively sweeping it, it's done. Your questions are answered. You know? But buying it ahead of sweeper activity, you run the risk that it gets left out because the company itself has issues. But there are a lot of names like Starbucks, right? There's so many names that are just dead money, guys. They've just been dead money. Dead money. Look at Starbucks. Okay? From 2021, you'd be down on your Starbucks in what people are calling a bubble of a market. So I think before this ends, these things have to have their time. Like in 2007, before 2008, these things had a crazy year in 2007. Ridiculous year. Ridiculous. Now, again, I'm not saying 2008 is coming. You know what I mean? You have people positioned for a recession in these things for the last 3 years. That's the best way to put it. The positioning in these cyclical names is positioned for a recession. And if you get anything but that next year, you probably do well with these things as a whole, That's generally what I'm trying to say here. All right, but I'm going to pack it up. Yeah, MSOS, it's again, I don't know anything about weed. It's speculative. It moves off Congress bills and shit like that. The only name that saw some buying that I played was the VFF. Saw some decent action with some time. This is weed, I think. I think it's weed. But other than that, usually keep spec action that comes and goes in the majority of these things. I mean, this, as you know, they're pure speculation. Pure speculation. All right, but yeah, so hopefully the remainder of the year here, guys, we see some more of these cyclicals catch some action, especially as we get into early next year, right? It starts to spill over into mid caps and smaller caps, and we can spend time on these webinars talking about ideas, and I can share with you guys if they're seeing aggressive buying or not, and because that's the most important thing now left, right? These things are set up. Plain and simple, the backdrop, the positioning backdrop, as far as they're already set up and they're trying to light the fire. Let's put it that way. Now, it's basically up to, in my opinion, sweeper activity to pour gasoline on that fire. And if they do that, it can be a insane first half in these things next year. So hopefully we'll spend the majority of the time on the webinar sharing ideas in the space of the market, because that's where the opportunity is going to be at. All right, my friends. I always appreciate you guys stopping by, talking some shop on a Thursday. Enjoy the rest of your week. We got the Fed next week. Should be some fun times. Steam Room members, I'll see you mañana. Have a good night, everybody.